Good morning, viewers. It's Friday morning, March 28, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Stocks fell after the US pushed ahead with tariffs on automakers, reinforcing concern about a widening trade war and offsetting data that showed faster than estimated growth in the world's largest economy. Stock indexes fell for a second day after the US unveiled new tariffs on automakers. President Trump said on Wednesday he would slap 25% tariffs on automotive imports to the US. All three major indexes ended lower on Thursday as investors grappled with US President Donald Trump's latest trade tariff announcement. The S&P 500 declined 0.33% to end the session at 5,693 points. Nasdaq dropped 0.53% to 17,804 points, while the Dow Jones Industrial Average fell 0.37% to 42,300 points. Just days before the end of a quarter that's set to be the worst for the S&P 500 since 2023, the gauge slipped anew. Traders have trimmed their exposure to US equities, with the S&P 500 down about 7% from its record high close on February 19. The Nasdaq is down almost 12% from its record high close on December 16. The S&P 500 and Nasdaq are both on course to conclude the first quarter of 2025 in negative territory. So far in 2025, the S&P 500 has lost about 3%, and the Nasdaq is down almost 8%. President Trump unveiled on Wednesday his plan to implement a 25% tariff on imported cars and light trucks effective on April 3, while the duty on auto parts begins on May 3. Investors are also bracing for a wave of reciprocal tariffs Trump plans to unveil on next Wednesday, although the president has hinted there may be room for flexibility. Despite this, overnight the US president threatened yet more tariffs. In a social media post, he warned that if the European Union and Canada work together to harm the US economically, they would face levies that were far larger than currently planned. Giants from Toyota Motor Corporation to Mercedes-Benz Group AG and General Motors Company got hit on Thursday. Ford, Stellantis, and other automakers fell sharply. General Motors tumbled over 7%, Ford slid 3.9%. Car parts manufacturer Aptiv and Borg Warner each lost about 5%. Stocks of international rivals such as BMW, Toyota, and Hyundai that export to the US also came under pressure. Foreign markets are more exposed to auto pain than the US, and some automakers have more to lose than others. In a volatile session on Wall Street, Tesla edged up 0.4%, with investors betting the electric vehicle maker will be hurt less by tariffs because of its largely domestic production. Apple added 1.05%, helping limit the S&P 500's loss. Shares of Dollar Tree jumped 11% as several analysts raised their price targets after the discount retailer on Wednesday said it is selling its struggling Family Dollar business for about $1 billion. GameStop shares sank 22%. The company said its plan to privately offer $1.3 billion of convertible senior notes and will use some of the proceeds to buy Bitcoin. Of the 11 S&P 500 sector indexes, 8 declined, led lower by energy, down 0.85%, followed by a 0.84% loss in communication services. The number of Americans filing new applications for unemployment benefits slipped last week, while the jobless rates appear to have held steady in March. Also on Thursday, the headline figure for fourth quarter gross domestic product growth was revised to 2.4%, higher than the consensus estimate of 2.3%. Investors on Friday will focus on the February personal consumption expenditures price index Fed Reserve's favored inflation gauge. In Thursday's trading, benchmark Treasury yields crept upward. The 10-year yield had settled at 4.369%, up from 4.337% on Wednesday. The dollar spot index was little changed. Bitcoin fell 0.3% to $87,052. West Texas Intermediate crude rose 0.2% to $69.79 a barrel. Gold traded about $3,060 per troy ounce in New York. Mounting trade uncertainty has driven demand for safe haven assets. My take: equity investors seem weary of pricing out risks and evaluating countless scenarios related to trade policy. The mercurial trade policies have created uncertainty on Wall Street as investors fret over potential disruptions to supply chains, hampered investment, and the specter of inflation threatening global economic growth. Investors are really cautious and wary of these trade policies. Even more than the policies, just the constant flip flopping. That makes people really nervous to make long term investment decisions, whether they are companies or investors. And that's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. I will see you now on Monday morning. Have a great weekend. In the meantime, happy investing, stay inspired, and remember, it's all about money.